Well, good day to everyone, and on the call, and thank you for joining us for the next 60 minutes. My name is Jared Kramer, and I'm an account executive at Logan Consulting, and one of the senior team members of the Microsoft Dynamics AX and 365 for operations consulting practice. Logan Consulting is a gold certified ERP implementation partner with Microsoft. Today, we are excited to be here with D365 UG and AXUG presenting a webinar on monthly inventory close in AX 2012. Am I doing it correctly? Let's first walk through today's agenda. So we're going to quickly go through a 30-second introduction to Logan Consulting, and then we're going to dive into it. We're going to explain what is the inventory close in Dynamics AX. Dave's going to walk through and teach us the basics of the close. Then we're going to run through a recalculation example, review all the buttons on the close form, and then execute the close. So first, for those of you on the phone who haven't heard of Logan before, I wanted just to give you a quick introduction. We were founded in 1992. We have been implementing and supporting ERP customers for over 25 years. We are headquartered in Chicago. However, we deploy over 80 consultants a year worldwide on our ERP-related projects. Although our experience spans over many industries, we specialize in manufacturing, distribution, and professional service organizations. We support our Dynamics AX 365 customers with assessments, implementations, and optimizations of their systems, harnessing a business process-focused methodology. As previously stated, we are an ERP Gold partner since 2003 and a very active AXUG member and contributor since 2014. And as you can see from this slide, we will be exhibiting at Nashville's, at Summit here in Nashville later this year in October. So come visit us at booth 722. Logan is also represented today by previously mentioned Dave Oceanero. Dave is one of our senior AX and 365 for operations consultants. And Dave will be conducting the rest of today's presentation and demo. And with that, I will turn it over to Dave. Dave, go ahead.
Thanks, Jared. Hello, everyone who is on the call. Thank you for joining me in the next 60 or so minutes, and thank you for responding to the poll at the beginning of the session. As Jared mentioned, my name is Dave Oceanero. I'm a senior consultant, senior project manager at Logan Consulting, and I'm excited to present to the D365 and AXUG group today. And I will be presenting on the topic of inventory close. Today's session is actually a piggyback session off of a colleague of mine, Rosie McAdams. She had a presentation last month that was on the inventory value report, and I hope some of you tuned into that as well. If not, I'd highly recommend going through the AXUG archives and finding her presentation. You may have seen a few of my blogs in AXUG. I'd like to contribute to the community. Most of them are on supply chain and the production side of the house, since that's my specialty, but I've dabbled in accounting as well, or have tried to. I'm hoping some of those blogs have helped some of you who are on this call. With that being said, let's get started with inventory close. So I first want to talk about some key concepts regarding inventory close. So as you can see on the slide, I want to talk about cost methods, physical versus financial inventory, and then recalculation and close. I first want to talk about that inventory costing methodology. The knowledge of a costing methodology is really a building block when discussing how close works. And so it may make some sense to take a second here to review this concept prior to digging into AX. When we talk about a costing methodology, I am talking about how you value your inventory. Do you cost inventory using average cost? Do you use FIFO, first in, first out? LIFO, last in, first out, etc. So let's use just an example from this week. If I buy one piece of item 123 on Monday at $50, and I buy one piece of item 123 on Wednesday for $10, and I sell one piece today, being Friday, what's the cost of my inventory? Well, if I'm using first in, first out, the cost of my inventory is $10 because the $50 transaction for Monday was shipped out today. The only remaining cost is $10 from our inventory we got on Wednesday. And then conversely, if I'm using last in, first out, the cost of my inventory is going to be $50 because the $10 piece I received in Wednesday is shipped out today. I know this seems like a very simple example, but I think it's effective, an effective way to discuss a costing method. And maybe you're not familiar with these terms in AX, or that's not your specialty. I did want to bring that up. The next bullet point I have on this key concept slide is physical versus financial inventory. These are terms you see throughout AX. Physical inventory is what is physically happening either on the shop floor or in the office. Physical transactions in AX include receipts on purchase orders, shipments on sales orders. Financial inventory is a term that is used once we enter in an invoice from a vendor, enter it and post it, or we invoice a customer and post the invoice to the customer. I also have a note on this page about recalculation and close, which we will discuss later. So now that we have these basic concepts tackled, let's move on to the inventory close. So inventory close, what is it? At the end of the day, closing in AX is a job that runs similarly to other jobs in AX if you're familiar with them. However, close settles issues transactions to appropriate receipt transactions based on the inventory value selected for the item. And remember, we just discussed inventory methods a short while ago, LIFO, FIFO, average. Close is a way to get the real cost on our inventory based on that method. And again, from a financial perspective, it gets real costs on our inventory, and systematically, it prevents users from posting anything in the past as well, which is valuable. So that brings us to recalculation versus close. So you can see I have recalculation as the first bullet point and close as the second bullet point. I'm going to use these benchmarks to identify when a recalculation or close should be run. So you can see recalculation I have recommended to run nightly as a batch, and close recommended to run monthly. Again, these are fast standards, so your business may be different. Perhaps you run long or have long-running production jobs that don't update often, or maybe you're an engineer to order shop that does not have a high volume of sales orders. You may not run recalc as often as what I have listed. There are also a few differences between inventory recalculation and inventory close. Inventory recalculation is not as firm as close. It can be run on a subset of items to track costing impact, and recalculation makes a virtual settlement between individual receipts and issues for the item according to the aforementioned item model group or item costing method. Conversely, close has to be run on all items. It is a firm process, and no new transactions can be posted in a close period. It will close transactions for future recalculations and will mark receipts to issues if needed. Now, I do also have a line there under close that pertains to marking. Marking is a concept in AX that can be confusing to some users. Other users get it pretty quickly. But when I say marking, ideally, conceptually, I want you to picture an example of a direct delivery in AX, or maybe you call it a drop ship in your business, where a purchase order is created from a sales order. The cost on that purchase order for an item will remain on the cost of the goods sold after it has been invoiced on the sales order. So that's a case where you want to keep that cost from your purchase order in line with what you sold. I really don't care I want to exclude that item from being recalculated. That's what marking does. It kind of supersedes your recalculation. All right, so the next slide I have is prior to a close. As transactions occur in post and AX, average costs are used on the item. So prior to a close or recalculation, the margins on sales orders that we ship may not be accurate. If we use FIFO, our costs will not match the average that is being calculated and used for costing in AX. So, with that being said, I want to dive into AX now and start looking at examples of an item that is the average cost on an item. So let me navigate to AX now. So what I first want to do is look at an example of average costing in our demo box. So I'm logged into the right company. I'm going to be jumping around here a little bit in between companies just to pull examples. Again, this is a demo box, so there's going to be, a lot of data that's might be confusing, might not be. So I just wanted to level set that. Let's look at an item that we have on hand. And I'm just going to look at this item number M6008, oranges. Pretty simple example here. So I want to look at the average costing on our inventory. So I'm going to navigate to the Manage Inventory tab. I'm going to look at our on-hand inventory. So you'll see, okay, we have 3 different batch numbers or lot numbers with different amounts of physical inventory. So what I'm going to do, we're only financial costing at a site level, so I'm going to hit OK. I'm going to navigate to my on-hand screen, and I want you to pay attention to the cost price, this 3.98. That is the running average cost of our inventory, of what we have within our 4 walls right now. And you can see the average cost is $3.98. So what I want to do also is look at what is our costing method on our item. So I right-clicked and view details on my item. And then I navigated to this item model group, and you can see that we have the FIFO item model group set up on this item. So first in, first out, which is probably going to be different than our average cost. So now we've looked at what our average on-hand inventory is costed at $3.98. We saw that it's FIFO. I want to take a look at transactions that have occurred on this item. So instead of going on inventory, I'm going to go to my transactions tab. And there's been some transactions that have gone against this item before, but I want you to focus on this sales order that I updated a couple days ago. You'll notice that sales order 93, I sold 100 pieces for $397.60. So that cost amount is coming from the $3.98 that we saw as an average cost on our inventory. That's where that cost is pulling from. So now what I'm going to do is navigate to my inventory management screen. I'm going to go to periodic, and I'm going to click the closing and adjustment form. Now, closing and adjustment form, and based on the poll from earlier this session, it seemed that a lot of you are unfamiliar if you run close or recalculation right now in your current instance of AX. This screen is where this occurs. So this is where you'd make your recalculations and closing from this screen. So I'm going to just run through a quick recalculation example to show you what happens when we do recalc. So our item number I already have defaulted in here, item number M6008, which is our oranges. I'm going to run this. And I want you to, and I'm going to go through each of these buttons later in my presentation, but I just wanted to run through this example first. If I look at our settlement tab, there is an adjustment here of $336.40. So what is the screen telling us? The screen's telling us that our original cost on the sales order was $397, but when I revalued it using the inventory valuation method of FIFO, we have an adjustment of $336.40. So how do we come up with this adjustment number? So I'm going to keep this screen open here, and I'll show you where that comes from. We're going to navigate back to that product. So I'm going to go to my release products, manage inventory, on-hand inventory. So again, our transaction, $398 out the door for our cost. What I'm going to do is expand my dimensions display so we can see warehouse, we can see batch number. You might have location on here too. I'm going to hit OK. But notice that my batch numbers are sequential. So the first batch number that was created was 00306. I have 07 and 08. So when we revalue using first in, first out, what AX is doing is it's going to take the value of my on-hand inventory from this first line, this batch number 000306. That was the first inventory that was in. So I'm going to revalue it and assume that that's going to be the cost that's going out the door on that sales order. So if I look at my on-hand cost of this batch number, remember this is no longer an average of the entire cost within my four walls. I narrowed it down to the batch level. Now this batch only cost us 61 cents. So, using a real life example, pretend that maybe it was on sale earlier this month and you got a really good cost price on your purchase order. So instead, what Recalc is telling us is it's going to take the 100 oranges that we sold on the previous sales order, multiply that by this 61 cents to give us $61 of cost versus the $397 that we originally costed on that sales order. So if we take 397 from our original transaction on the sales order and subtract $61, we get an adjustment of $336.40. That's where this adjustment's coming into play. And that's how you calculate that first in, first out principle. So I hope that was clear for you. So now let's go back to that closing and adjustment form. Since it seems like a lot of you are unsure if you guys are running close or recalculation, so it makes sense, I think, to run through each of the buttons on here. So the first steps in closing involve this button up here called the close procedure button. There's a couple steps that are involved here called check open quantities and check cost prices. So when I do my check open quantities, I'm going to click on the last day of the month that I will be closing inventory for, and I'll click OK. This report will print all the open quantities that are not fully settled by the inventory close on the specified date. Examples of items that could be on here are items that were physically updated but not financially updated before the inventory close date. And then normally what you do is before running inventory close, you'd want to distribute this list to appropriate people to financially update anything that can be ended. You know, any open production orders, shipped and received purchase orders, sales orders. So that's what this report's going to show. In our demo box, it actually takes quite a while for it to run. So what I did, I actually ran a report in a different company, and I exported it to Excel so you could see what it looks like. So here's the open quantity report. I'll tell you when you ran it, and what it's going to do, it's going to give you a list of all your item numbers along with their product names, any specifications around this item number. So maybe there's a marked transaction, or it'll filter this report down so you could look at a dimension and site on this item, and then it will tell you how much of the quantity is open. So again, you know, these are the transactions that have not been financially updated. Send this list out to the appropriate resource and let them, you know, handle these transactions prior to close. So that's the check open quantities report. Also, there's ways you can filter to check open quantities, maybe an item number is a troublesome item, an item group. If you have trouble with an item group, you could filter this report down, just target certain items and item groups. So we've tackled the check open quantities part of the close procedure. The next part of close would be, or pre-close would be, to check cost prices. The check cost prices report will verify that there are no wild fluctuations in prices. It will verify that prices are within an acceptable range that I can enter in here, a maximum percentage deviation that I want to look at. So I'd want to choose that deviation percentage, and this would be, you know, acceptable for the deviation from the item's cost price on any given transaction. Again, we could choose an item number, an item group. We could click OK, and the report printed, this one runs a little bit quicker. The report printed will give a list with dates of transactions that deviate from the cost price. Once the report is printed, look at transactions for all items on the report. This will help you identify any costs entered in error. Now, this report's extremely helpful and will help manage those extreme costs that come up kind of throughout the quarter, throughout the month, and it actually helps with audit too. I do also want to make a note that if you haven't run close before and you run this report, you're probably going to receive many messages pertaining to actually this error right here, that the unit cost price is 0. But I know on page 2 of this report, I do have an item number here where we have purchase order 44. We have a cost price of 20 cents on the item, but if I look on this purchase order, it's probably not even close to 20 cents. So it'll tell you the deviation exceeds the limit of $50. So if I were to navigate to this purchase order 44, we'll see that there's a big discrepancy. So let me go there. You know, open up that purchase order that they were referencing. And you can see the unit price is $10 on this purchase order instead of the unit cost of 20 cents. So there's a huge discrepancy there, and there's a red flag. Hey, what happened on this purchase order, and why are my costs so far off? So it's a nice little tool, and like I said, it helps with audit to keep, when you print that report, keep it on hand as something to reference when you do go through audit, and why are your prices so extreme? So the next thing I want to talk about in this closing and adjustment form is this new feature that was released in R3 called PreClosing. So PreClosing is a feature that was released in 2012 R3 that was designed to help reduce the amount of time it takes to run inventory close. So again, back to that poll at the beginning of the session, I noticed that system performance was an issue with, was the main issue with running inventory close at some of your companies. Pre-closing is done on items that are physically tracked instead of financially tracked. The type of tracking is set up on storage dimension groups, which is a setup under product information management, under the product information management module. That's a drop-down, from your breadcrumb, but it's under the setup tab. So you may or may not be able to see it depending on your security. And with the non-financial transfers feature, InvenTrans transactions that are associated with non-financial transfers are closed at their current cost. So again, looking at non-financial transfers, physical transfers are a common type of inventory movement that is not financially tracked. However, the change does not affect the inventory transactions where marking is applied. I did want to make a note there. So if there is marking on transactions, that will still supersede this pre-closing process that's run. So let me show an example of an item that has a non-financial, that was settled using a non-financial transaction. These non-financial transactions are pretty prevalent in the new WMS module, specifically pertaining to work transactions. And that's what I want to show you. That's why I had to navigate to a different company to pull up one of those transactions. So let me find my item that's been closed by this process. So I'm going to look at my item number A0001, go to my manage inventory. I'm going to go to transactions. I'm going to actually filter on work. And then I'm going to just highlight one of these lines. I'm going to go to my update tab. You'll see that it's been financially closed on 6/22/2017. If I go to my general tab too, you'll see that the value open is no. So it's not open, it's been financially closed. So this pre-closing feature actually is pretty cool. Saves you some processing time on those transactions that might bog down your system. So definitely would recommend using that if there are scenarios or transactions in your environment where you're not calculating that financial cost. So after the pre-closing button, we have the recalculation button that we walked through earlier when we discussed that example with the oranges. Now I do want to talk about the adjustment button. So the adjustment form on the close screen allows the user to make manual adjustments to on-hand inventory, transactions, or revaluation for moving average. And revaluation for moving average is just another type of, another item costing method. When you go into adjustment, let's just look at transactions. you would click this select button, and you could filter by item number, transaction date, voucher number, batch number. There's a bunch of settings you could set up when you click the select button to trim down the results you get. So once the screen populates with transactions, you are able to adjust the transaction cost amount. You'd want to enter in the amount to increase or decrease the transaction in the Edit Now field. You'd click Post and make sure to change the posting date to the date of the original transaction. I also want to note that a close must be run prior to making an adjustment to any on-hand inventory using this adjust transaction feature. Excuse me. And any on-hand adjustments from this form will default to the posting date of the last inventory closed. And again, remember, this is probably going to be someone like a controller, cost accountant who will be making these adjustments. So these adjustments should be and probably will be vetted prior to making them. If you see some discrepancies in your costing, you can make adjustments straight from the screen. There may be cases where you might want to go back to the item and update the item's price prior to making any adjustments here. So you can make also you can make an adjustment or make a selection to pull one item and make an adjustment on all the transactions that happen on that item if you don't want to change the item cost. And this adjustment will show up on your inventory transaction screen. So let me go into a different company. So here, this is an example I posted prior to the session today. What I did, I created an adjustment. So I clicked the adjustment button, created a new adjustment selection to only look at item number M9001. So when I pulled that into the adjustment form, the item number pulled up and it showed the purchase orders that had been transacted against. What I did, I adjusted each purchase order up by a particular amount. So my first one was 3,000, 1,200, 1,300, 14, 15, etc., just to show you that you can make adjustments on the transactions. So if I were to go back to this item number, so I just right-click View Details from the item number, which took me to my Released Product Details screen. Navigate to my Manage Inventory tab and click Transactions. We'll see the cost amount on this line is now $4,152. And how did we get to that value? I click the Update tab. Our first cost amount was $1,152. And we had an adjustment of $3,000, which I posted today. So you can see that there is some traceability, and from an audit perspective, you still capture those adjustments that you make from the closing and adjustment screen, which I think is a great feature. So yeah, you're making adjustments, but they're still being tracked against each transaction line. So continuing on top, looking at our closing and adjustment screen, cancellation. There's an option to cancel recalcs and closes. When we pull it up, you have an option to run a cancellation to one voucher, or you can run all recalculations from a particular date. Notes can be entered on the calculation too. Helps from a traceability standpoint. What happened? Why did we cancel? Was there an issue? so on and so forth. Now there's another button up here, the calculation button. The calculation button will show us what items have been calculated on the recalc, pre-close, or close run. So if I were to click the list on the recalc, remember this is the item that we ran recalc for. If I ran the recalc wide open, every item number will show there. If I click the General tab, it shows item number, voucher, and over here to the right, it will show us the level of a BOM calculation. So that shows the level of the latest requirement calculation for BOMs. So depending on how far down your BOMs go, that will tell you the level that it went down to. On this calculation button, there's also a pause calculation and a resume calculation. And you'll see this a lot of times. Actually, I had a client earlier this week. They ran into an issue with one item. It had a transaction that had a positive quantity with a negative value, which was causing an issue. So inventory close actually stopped. And it said, hey, an info log came up, hey, this item is causing a problem. They have different signs. One side's positive, one side's negative. Can you take a look at this? So took a look at it, made the adjustment we needed to, and then on the close that was highlighted, all we had to do was click resume calculation. We got through that problem and it continued calculating and everything was smooth after that. So that's the calculation button. The next button actually is our settlements button, which we looked at previously. Again, it will show the users the inventory settlements that are related to the voucher. Again, item number, reference, transaction number, and we will also see the principal and adjustment. Like I mentioned earlier, I think this is important. This is probably the most important screen after you run your close. The adjustment is the posted correction of item consumption resulting from that settlement. And again, if you have a principle here of marking, I just want to make sure that that we know that marking is used to ensure that the cost of a specific receipt is settled against a specific issue. Remember that drop ship, direct delivery scenario I brought up earlier. And it can be applied to inventory transactions and will supersede the inventory costing principle that we have here. So here we have FIFO, but if we had some marked transactions, we'd see that show up here. And then if we navigate to the General tab, you'll see additional information pertaining to a settlement type, item group from the item, transaction time. So a lot of this, I guess admin information's here too, which I think is very helpful. The transaction time can help you pinpoint. And then the Ledger tab will show us the P&L and balance sheet posting. And then if we navigate to this Financial Dimensions tab right now, I don't have Financial Dimensions set up, but the Financial Dimensions come from the transactions or order that was used in recalculation. So once close has been run, so if everything looked good, we'd run close. Let's close. Normally you'd want to run up to a particular date, end of month. I'm going to hit OK. These maximum throughputs and minimum throughput adjustments, those are pertained to how many levels you want to go down on BOMs again. It's mostly a production setting. So the more you have, the longer close will take to run. So if you're having some system issues with the amount of time it takes to run close, I'd recommend maybe shrinking this tolerance down, maybe 1 to 15, 1 to 20, just to see how that impacts close. Obviously run it in a test environment first before running it in production. And then there's also run recalculation after closing. So remember, when you run close, it's really a firm stop. So it's not going to let you go back in time and use the costs on any items previous to close. So the reason why you want to run recalc after closing, let's say you close, in our example, on 6/30, we close inventory. Anything that happened from July 1st to today will be used when we run recalc. If we didn't close, recalc would look back from the last time you closed. So maybe it's your environment you haven't closed since you went live. Recalc's going to go back 2-3 years and come up with, adjustments based on all those transactions that are in your environment. So from a system speed perspective or performance perspective, if you're not closing on a monthly basis or a yearly basis or whatever that cadence is, you're going to have performance issues because it's running so many calculations. Whereas when you close, hey, we can't make changes to the past. Let's start running recalc based on, if you're closing 6/30, 7/1 to 7/7. So again, when you run close, you're going to see what it's running. It's going to look at your items and what level. I ran a close earlier this month, a couple days ago actually, so I really don't think there's going to be that much that has changed in close. But since we're kind of pushing, close to the top of the hour, I do want to show you a key screen once items have been closed that I think is useful. It's your inventory transaction screen. So I'm going to navigate to inventory, inventory management, inquiries, transactions. So when you open this screen, you're going to only see columns up to this adjustment field. What I did, I actually pulled value open, which actually comes from your general tab on your inventory transactions screen. So if you're running close or recalc in your environment and you want to see what's still open, I'd recommend pulling that value open to the front of the screen through a personalization. Again, the value open is under general and it's under this posting. It's one of these fields under posting. And then you also want to pull the financially closed column to the screen too. The financially closed column is under the update tab and under the settlement section of the update tab. So I'd recommend those two fields. Can you pull more? Of course. But just from a quick visual standpoint, if you want to see what's still open, you'd want to look at value opens that are yes. So I'd look at yeses and I'd say, okay, why are these still open, and is there a way we can, get these closed? So that would be a great screen to use to see what's still open. I do want to show you one more example. So I want to target item M6009. I want to look at transactions here. So if I look at this purchase order, our financial date was 7/3. If I look at the general tab, the value is still open. Whereas if I look at some other transactions on this item, the value's closed. Value open is no. So I actually ran inventory close for this item on the 3rd. But what I did is I chose a 6/30 date as my close date. So that's why it's still showing up as open. Even though I ran close on, let's say, July 3rd, and this is something that may or may not help you. Regardless of when you run close, you still choose the date that you want to close through. So close, it'll show that I chose, I ran it on 7/3, but I closed on 6/30. So I just wanted to make you aware of that. It can be a data issue that might confuse some of the users. So I'll show you what I mean. Oh, hit the wrong button. So if I go to closing and adjustment, my closing was on, I chose the date of 6/30, but my close was executed on 7/3. Again, just some information that you may need to remember if you're going back on closing and looking at dates tied to close as, hey, why does it say it's open when I thought I ran it on 7/3? Well, maybe the date you chose was different. So that's an example of that type of scenario. So I know we're about 10 minutes. I did want to open it up to maybe some Q&A. I do want to thank you for being on the call. This session was designed to review the inventory close screen and verify that your company is running close correctly. The reason why I conducted the poll is I wanted to gather some data to see what some of your biggest issues are with inventory close. I know it's one of those gray areas, I guess, in AX. I know, personally, MRP and close are two big areas in inventory and production that seem to, there's a lot of questions around those two topics. So the examples we used today were related to FIFO and LIFO. And I know many clients may be using average costings. So I think for me as a takeaway, what I'd want to do, since this was kind of an introduction session, maybe sometime in the future we have another webinar through the AXUG that's more of an intermediate session, and we tackle some of those instances that are tied around weighted average costing, because I know a lot of clients of ours have come to us asking about, hey, why do we have this calculation here, or I have financial value on my on-hand inventory, but I don't have physical value. So those are just some of the things that I'd probably want to tackle in an intermediate session. And just some other things I wanted to bring up that are just some simple troubleshooting techniques. Some common issues we find are changing of inventory model groups on items. So if you have a question about why is my inventory being costed this way when I have FIFO set up, or so you thought you had FIFO set up, maybe someone went in and changed that inventory model group to LIFO. I know that's an issue you see pop up. Financial inventory flags being checked or unchecked. Remember, I brought up earlier where that storage dimension setting is set up under product information management. Dimension group, storage dimension groups, and where you track your physical and financial inventory. Maybe a flag was checked there that accidentally was checked. And then again, I saw a lot of people have performance issues. Is that performance issue maybe because you haven't closed your inventory in a while? Something to think about, something to look at. And then I guess just another basic issue we see sometimes. I know it sounds simple, but it might not be the first thing you think of, is make sure your inventory module is open for a financial period. So maybe accounting closed the period for June. It's the 7th day, 8th day of the month, which that's when close typically happens, but you haven't run close yet. Make sure that your period's open so you can make those adjustments for your inventory close. So I guess with that, Julie, I'd like to turn it over to questions and comments. Again, if you have additional comments or questions, feel free to reach out to me. We do have a blog, like I mentioned, where we have a good inventory value report blog, and then an inventory close blog on loganconsulting.com. Also, the blogs are posted on AXUG. So if you see my name floating around, hopefully, I could help you out with some of the questions you have. And again, if you have any questions, feel free to reach out to me.
Thank you so much, Dave. We've got just we're running a little short on time, and we got a couple questions in the queue from Wendy. She said, did you say to run recalculation daily in a batch?
I guess, yeah, it would. Typically, I would run recalculation as a nightly process, maybe, 2, 3 in the morning, set it up as a batch and run it. I actually didn't. You do have the option to set it up to run it as a batch in inventory management. So if I scroll down really quick, closing and periodic. You could set it up to run as a batch, just take your batch processing, and then you could set up a recurrence. But again, each company is different. So if you have a lot of transactions and, it doesn't bog down your system and you feel like you can run recalc that often, I would definitely recommend that. It will give you just better costing and give you better margin analysis when you're looking at your shipped sales orders on a daily, weekly basis. You're not looking at average cost. You're really calculating the true cost of your inventory based on that method.
Great, thank you. And one final question from Victor. He asks, what is the main difference between recalculation and close?
So recalculation is more of a virtual settlement, and whereas close is a firm settlement. And once you close, you cannot go back in history to pull historical transactions when you're calculating a recalculation or close. So if I'm a company and I'm only running recalculations, I'm going to go as far back as when AX started to come up with those calculations and adjustments on recalc. If I run close every month, I will not go back and use those transactions and calculations going forward from whenever you close. So recalc is it's a virtual settlement.
Great, thank you so much. And that is all the questions we have today. I want to remind everybody to fill out the survey and let us know if you'd like to see a follow-up webinar, as Dave alluded to. We'd love to put it on. And with that, I'm going to wish you all a great weekend. And thank you for spending time with us today.